If your business is relying only on one revenue stream, then you can go out of business at any time. In this video, I want to show you how you can maximize the opportunities within your business to make additional income streams. Our lesson for today is creating multiple revenue streams. We will be looking at the definition of revenue and revenue streams. We will be using real world examples to bring out how you can create revenue streams within your business, and we will be analyzing these revenue streams in order to match your business. What is revenue? Revenue is the sum of all income generated by a business, and this is before any expenses is subtracted. So revenue streams are the different sources from which money flows into the business, the different ways you make money into your business. To bring out clearly how revenue streams operate within our business, we will be using a school as our first example. All of us can identify with the operation of a school. And on your screen, there is a pie chart which breaks down the various areas in which this school can generate income. 75%, which is the blue portion on your screen, 75% of the revenue is coming in from school fees. However, we all know that schools operate tuck shop and school operates canteen, and therefore a portion of their revenue will be coming from that operation. On your screen, the orange portion is saying 10%. So 10% of the revenue of the school is coming from tuck shop. At the end of the year, they also have graduation ceremony. 5% of their revenue comes in from those activities around graduation. We look also at the red portion within the pie chart, and it says uniform sales. Now, the students that are attending the school, these are the persons who are now buying uniform. They are buying the tunic, the blouse, the belt, the crest, all of those. So the school is making 5% revenue from these sales. Of course, there is always a passive way in which the school can make revenue. Now they are looking at rental of their halls and rental of the school ground, rental of the classrooms. And this school is saying that they can generate 5% of their income from the rental of their facility. From this simple example, I want you to picture your business, and I now want you to take a strategic look at your business. What other revenue streams that you can bring into your business to come alongside your core operation as additional revenue streams? Let us look at some more real world examples. This is a grocery shop, and for this business, dry goods, which is the core function, the core operation of the business, it takes in 55% of the revenue. This grocery shop also sells fresh produce and meat, and the orange portion represents 25% of the revenue that they are making from fresh produce and meat. They also seize the opportunity to prepare meals for persons in the community or for nearby schools. 12% of the revenue is coming from food. They also seize the opportunity to sell household items, cleaning chemicals, and 8% is coming from this aspect. I want to ask you a question. If your main or your core service or product should disappear tomorrow, what else in your business would keep the lights on? If your biggest customer should leave you, which other slice of the pie would be able to run the business? If you are operating with only one stream, you are likely to go out of business at any time. But if you have multiple streams, then there are different areas in the pie that now you can seek to expand in order to bring revenue within your business. Another example that we would like to look at is that of restaurant. Now, the revenue mix for this sees 60% of sales coming in from customers that are dining in. This person is operating a bar as well as selling other beverages. 20% of the income for this business is coming from beverages. Takeout or delivery service, they are taking the opportunity to seize this within the marketplace. 10% is coming in. Catering, they might be catering for weddings, funerals, graduation, birthday parties, but they are seizing the opportunity to offer catering service. 7% revenue is coming from that, as well as they are selling small merchandise within the restaurant. They are bottling sauces. They are looking at what persons need, and they are trying as much as possible to capture that market. And they have a 3% revenue coming in from that aspect of the business. Let us look at a service business. This is that of a electrician. Now the revenue mix sees 65% of this electrician business coming in from emergency calls. And we all know that there are household persons who have emergency, their businesses, and they just need an electrician to come in and rectify the problem. These electricians, they are always on call. Today they are in one parish, another day they are in another parish, and they are just going and going. These are emergencies, and 65% of their revenue comes from those emergency calls. Now, when they are doing their daily work, they are seizing the opportunity to sell the parts that they are working with to these customers. Now, the electrical fittings and the parts that they need to use, they are adding markup to it, and they are bringing in 20% of their revenue from the sale of these electrical fittings and electrical parts. Another good move is to have a monthly maintenance contract with some large companies. So every month they are seeing 8% of their sales coming in from maintenance contract. They are also bringing in sales from consulting. Some persons just need a electrician to come in and give them a quote, such like that, to look what is happening, to make an assessment, consulting fees, tell them what is happening within their building. 5% of the sales is coming from that. Subcontractor fees, 2%. So you see the revenue mix is not just emergency calls that is happening here, but there are other areas in case there is a fall in the amount of calls that they get. Now they can look, at least they have some income coming in from maintenance and from consulting. So it's just not just one revenue stream that they are benefiting from. Let us look at a hair salon. Now, this hairdresser is someone who do natural hair, and therefore they would be braiding as well as they would be putting in extensions for persons. 55% of their revenue is coming from that. However, they seize the opportunity to have a showcase where they are selling some retail products. 15% of their revenue is coming from the sale of those products. Again, there are some persons who will be coming to this hairdresser, although she's a natural hair person, but there are other persons who wants treatment for their hair and they need coloring for their hair, etc. So from the processing of chemical services, 20% is coming in. And of course, this person realized that the area that they are operating in is a large area, and of course they can rent a chair to a additional hairdresser, or they can rent it to a barber, or they can rent it to a nail technician, and therefore they are generating a passive income. They don't need to do anything to get this additional income, but they're getting 10% income from the chair rental. These are ways that you can utilize in your business. So, as business owners, I want you to look at your business, have a strategic view of what else you can do within your business to bring in additional revenue. When it comes to analyzing your revenue, it means that you will now have to look at the different areas that the income is coming from. You need to identify whether they are profit suckers as against cash cows, because not all revenues are equal. To break this down a little simpler, there are some areas within your business that, although they are making a lot of sales, it takes a lot to run these areas. And therefore, at the end of the month, you only see a small profit. Let us look at a school. A school might be running a tuck shop. Yes, at the end of the month, the sales may be high, but now you have to look at paying those persons, paying your suppliers for all the goods that they have supplied to you. You now have to look at paying staff to work within the tuck shop. You have to look at the electricity bill that is generated from the refrigerator. You have to look at the electricity bill that is generated from the patty warmers. So at the end of the month, yes, it makes a lot of sales, but all the profit is sucked out in different areas, and at the end of the month, it's only a small profit that is left. So look at your different revenue streams and analyze how the profit is being really tailored for at the end of the month. Also, your cash cows with the school as well. They may be renting the school hall, the school ground, the school compound, but it does not cost them anything much to rent those areas. So the revenue that is coming in is not being sucked out by the cost of renting the area. You also need to have a strategic focus. You need to look where the market is moving for the revenue stream that you are creating. Let's say you are running a hardware store. You might notice that tool rentals are growing faster than tool sales. This tells the owner that you should stop buying tool sales, tool equipment to sell, and instead you should be investing more in rental equipment. So be vigilant and look at what is happening in the marketplace. When analyzing your revenue stream, look for those areas where you can increase customer value, meaning it is much easier for you to sell a second service to a existing customer. If you are operating a school, the person is already paying school fee. You can increase customer value by offering uniform sale to the customer. You do not need to go out and get a new customer because you already have the parent there. So look at revenue streams that you can create, that you can use to serve your existing customers. Also, for revenue streams, you need to look at how your cash will be coming in. You need to predict whether these are one time sales, whether these are recurring sales, which will be happening on a monthly basis, or whether these are just add on services that you will be giving. These will allow you to predict your cash flow on a weekly, daily, monthly basis. Now, I want you to be proactive in creating additional revenue streams within your business. I want you to list all the ways that you are presently making money in your business, and also list all the ways that you can make money within your business. Look at the marketplace, see what is happening in other businesses, and see what is available, what opportunities are available within your business for you to create some additional income streams. I want you also to go ahead and predict the percentage. How much revenue are you expecting each of these streams to bring into your business? And of course, look whether they will be profitable or not. Thank you for spending the time with me. Until our next lesson, when we will be looking at analyzing our profit, take care. I am Shevena Cameron-Tracey. Remember to like, subscribe, and of course, share with your fellow business associates. Until then, God bless you.